Good day everyone, I am Denise Lexi Omlas, and today I'll be discussing you the Module 19, the insurance policy and coverage. In this module, we will describe the policy terms including the premiums, deductible, and policy limits, and explore the major insurance companies operating in the Philippines in their product and services, and also differentiate the traditional from variable universal life insurance including the advantage and disadvantages. What is insurance policy? It is a contractual agreement between an individual entity, the policyholder, in an insurance. It outlines the terms, conditions, coverage details, and obligation both parties regarding financial protection provided by insurer exchange for premium payments. First, we have the premiums. Are the regular payment made the policyholder to maintain insurance coverage. And we have deductibles. Is the amount the policyholder must pay before the insurance company covers the remaining costs. And the policy limit are the limits of maximum amount an insurer will pay for a covered claim. And there are two types of policy limits. The first one is the per occurrence limit. This is the maximum amount the insurer pays for a single claim or event. And the second one is the aggregate limit. This is the total maximum amount the insurer will pay for all the claims within a policy period. And we have the coverage terms. It defines what is included and excluded in the insurance company. And the second to the last one is the renewal terms. It explains the condition for continuing or updating the policy after it expired. And we have the grace periods. Is the extra time allowed to pay premiums without losing coverage? And take note, always refer to the terms and conditions of the specific insurance policy that you are considering or have in your place.
So now, let's move on the insurance companies in the Philippines. So there are two main types of insurance, which is life insurance and the non-life insurance. So what is a life insurance? So life insurance provides financial support for a life-related event such as death or funeral expenses, while the non-life insurance protect properties and finances against risk like accident, damage, or loss. So here's a table that shows differences between life insurance versus non-life insurance. As you can see, you can clearly see the difference between the two in several ways. First, the policy period. Life insurance is long-term, while non-life insurance is short-term. Second, the nature of the policy. Life insurance is an investment, but non-life insurance is a contract of indemnity, meaning it only covers losses. For example, in life insurance, a person pays life insurance to provide financial support in the future. It helps their family when something bad happens to them. Some plans also give savings after many years. But take note, life insurance is not always an investment. Some are just protection and sometimes it's savings. Third is insured. The policyholder will receive the benefit of coverage. It means that the policyholder, the person who bought the insurance, will get the money or support provided by the insurance when a covered event happens. In non-life insurance, the policyholder and the other people insured under the policy can enjoy the benefit of the coverage. It means that not only the policyholder but also other people included in the insurance, like family members or dependents, can receive the benefit when something covered happens. Fourth is the claim. The sum is only paid when it matures or upon the death of the policyholder. It means that the insurance money is not given anytime you want. It is only paid in two situations, which is when the policy matures and when the policyholder dies. So let's get an example. If a person gets a 20 years life insurance plan worth of 500,000, if they are still alive after 20 years, they receive 500,000, which is the maturity. If they pass away before 20 years, their family receive 500,000 instead. So in simple terms, you or your beneficiary will receive the money only at the end of the policy or upon death. While in the non-life insurance, the claim is processed when the policyholder suffers from damage or financial loss. It means that the insurance company will handle and pay a claim only when the policyholder experiences damage or financial loss covered by the policy. And lastly, the cost. It depends upon the sum assured offered by the insurance policy. Means the amount of benefit or payout you receive from the insurance depends on the sum assured, the fixed amount stated in the policy. In short, the higher the sum assured in your policy, the higher the possible claim or payout. While in non-life insurance, it depends upon the insured assets. It means the insurance payout depends on the value of the asset that are insured. So, let's get an example again. If a person insured a house worth 2 million, if the house is damaged by the fire, the insurance company will pay based on that insured value up to 2 million pesos depending on the policy covered. If another house is insured for only 800,000, then the maximum claim will be lower. So in short, life insurance is long-term and focused on the future benefit like death or maturity, while the non-life insurance is short-term and focused on protecting against losses like accident or damage.
So, here's the top 5 insurance companies here in the Philippines. First, let's understand NBAPE, which stands for New Business Annual Premium Equivalent. Think of it as a score that tells us how much new insurance business a company is bringing in each year. It's a standardized way to measure growth, making it easier to compare different insurance providers and see who's expanding their reach effectively. We start with Sun Life of Canada, Philippines. They have a long history here, being the oldest life insurance provider in the country since 1895. Sun Life offers a comprehensive suite of products covering needs like education savings, health protection, retirement planning, and investment opportunities. Next is PruLife UK. Established in 1996 as part of the Global Prudential Group, they provide a variety of insurance products, including those linked to investments term like insurance, health coverage, and protection against accidents. Then we have Alliance Penby Life Insurance, which began operations in 2001. They offer a strong mix of health, life, education, and retirement plans along with investment-linked insurance. BDO Life Assurance Company Inc. Founded in 1999, focusing on helping Filipinos with their savings goals, providing essential protection for their families and planning for a comfortable retirement. And finally, AXA Philippines. This company is a powerful joint venture between the Metrobank Group and the AXA. They offer a wide array of insurance solutions covering everything from life and health to income protection, education, retirement, property, and even business insurance. So, whether it's starting health, companies measure their success with NBIPE or choosing a trusted provider for your life insurance needs, these companies represent the forefront of the industry in the Philippines.
Non-life insurance in the Philippines. Non-life insurance is crucial for protecting our assets and covering unexpected events. First, we have BPI-MS Insurance Corp. Imagine having a trusted bank like BPI team up with a big insurance name like Mitsui Sumitomo. They offer a whole package of protections, whether it's your car, your business, your property, your home, or even things like marine or aviation risk. They have you covered. Then there's a Star International Insurance Philippines. They They are a global player bringing their expertise to the Philippines. If you are planning a trip, need health coverage, or other general insurance solutions, is Star is there to help you navigate the risk. Next is FPG Insurance. This is a prominent Philippine company and it's part of the global AXA group. FPG is your go-to for protecting your vehicles, your property, and even for your travel and health needs. They offer a solid insurance solution tailored for Filipinos. Let's talk about Prudential Guarantee and Assurance. They're known as a top provider for non-life insurance. They work with the big corporations and individuals alike, offering protection for accidents, health concerns, your car, aviation risk, and general casualty events. They're a reliable choice. And last is Card Pioneer. Pioneer Micronations. This company focuses on making insurance accessible to everyone, especially to who might find traditional insurance too expensive. They partner with a card and Pioneer to offer affordable microinsurance for things like fire, marine, home, medical, and car needs. It's about providing a helping hand with its most. Traditional life insurance advantages: stable and predictable premiums, benefits, guaranteed rate of return suitable for risk-averse individuals. Disadvantage: limited investment options, lower returns compared to alternative investments, limited flexibility in adjusting coverage or premiums, variable universal life insurance. Advantages: potential for higher returns due to investment component, flexibility in adjusting coverage and premiums, potential for cash value growth. Disadvantage: higher risk due to market fluctuations, potential for lower returns or loss of principals, more complex than traditional life insurance.